Hello there, you're welcome back. So this is a quiz basically, and you'll have to identify different items. Um, in the terminology video, we discussed different terminologies under major five headings, and these headings are capital, asset, liability, income, and gains. And it also includes revenue. And here expenses and losses. So one, two, three, four, and five major headings. So on the next slide, you'll become some of the items and you'll have to define that out of these five headings where that item comes. So let's start with the items. So here we have different items, 1 to 8 items in this list, and in the list number 2 we have 9 items. So out of these 9 items, you take some item and try to define the category under which these items come. For example, the capital, liability, revenue, gain. So out of these major headings, under which category this trade receivables come? And then machinery, salary, interest received, goods purchased, sales of the goods, interest paid, and wages paid. And in the list number 2, loan taken, truck owned by business, plant and machinery, money invested in the shares, furniture bought by owner, goodwill and patent, depreciation, outstanding expenses and prepaid expenses. So let me give you one example. Let me tell you in which category this trade receivable will come. So trade receivable is basically some particular amount, say 100 rupees, which is receivable to the business because business has sold some of the goods on credit to its customer. So customer will pay on the predetermined on a specific date, say 31st of January 2020. Customer will pay back this 100 rupees. So this 100 rupees is receivable to the business. So basically this is a receivable. This paper is an asset to the business. And this paper is a current asset because it can be converted into the cash within a period of 1 year. So I will write here it is a current asset. So for rest of the term you give it a try, and for that you have 120 minutes. So your time starts now. Okay, so I hope you could do this. So let's start with the rest of the items because we are already done with the trade receivables. So now we'll give it a try. Machinery. Machinery is an asset to the business because machinery will accrue benefit to the business, and the benefit would be for the long term. So that's why this is a fixed asset. And salary is paid to the employees of the business in return to their services, so it is an expense. And interest received is an income to the business, because interest received may not be the main business of the income, or we can say that interest received may not be related to the operations of the business, so we will term this as other income to the business. And goods purchased are expenses to the business. Since the money has been spent on purchase of the goods and money goes out of the business, so this is an expense, and goods are purchased for reselling purpose or to continue the operations of the business, so that's why these are operating expense. Sales of the goods. If we sell the goods, we get some revenue, and revenue is an income. Interest paid. Interest paid is an expense to the business. Wages paid to the worker, it is also an expense to the business. Loan taken. So we have taken some money, so this is a borrowing, and we have obligation to pay back. So that's why we'll term this as a liability. So if the loan is taken for the 10-year, this is long term, and if loan is taken for 1 year, this is short term liability. Truck owned by a business. A truck is an asset to the business because it will give benefit to the business. Plant and machinery is also an asset because it will give some benefit to the business in terms of production of goods. Money invested in the shares, it is an investment, and an investment can be termed as an asset. Furniture bought by the owner. If furniture bought by the owner or anything bought by owner in kind or in cash would be termed as capital. So in kind it can be furniture, it can be truck, it can be anything else, and in cash it can be money, 100 rupees, say 1 lakh rupees. So that all would be termed as an asset, capital. Goodwill and patent, both are intangible assets of the business because both cannot be seen and cannot be touched. Goodwill or reputation we can't see, and a patent for any design or any technology is also mere a paper. So because both accrue some benefit to the business in terms of increased sales or in terms of protection from the competition, then both would be assets to the business and would be intangible asset. And the next is depreciation. Depreciation is a decrease in the value of fixed assets. So decrease in the value of fixed asset would be an expense to the business. Outstanding expenses. Outstanding expenses refers to any particular expense that we have done but not yet paid. For example, if I take services of any laborer but have not yet paid him or her the labor, so that would be an outstanding expense. So outstanding expense, we have an obligation to pay on some future date, so that's why because of obligation it becomes a liability. And prepaid expenses are those expenses which we have paid but not incurred. So this is an asset for the business because there is some benefit that we can accrue, and for that we have paid in advance. So that would be an asset for the business. For example, prepaid mobile recharge. This is also an asset for the business, and this is a current asset to the business. So that was all for today's presentation, and thanks for listening.